Let me quickly run a candle range theory and my break and retest theory together so that you understand what I mean. Candle range theory is just a range between the candle range high and low, which is almost the same thing as previous highs and lows of a candle. But why they term it candle range theory is because you can use it as a perfect entry if you understand and know where it occurs in the market. You understand? So when you hear candle range theory, it means the sweep of the low or the highs. When price sweeps previous lows or previous highs and now closes back inside, that makes it a candle range theory. And for it to be very valid, as this month previous monthly highs and lows, let me use this previous monthly highs and lows as an example. This is a monthly previous high and monthly previous lows candle, as in, let me put it, previous candle, the previous highs and lows. So now if you see from here, you can see that the previous lows was taken, and as it's taken, it did not continue downward to clear this side of the liquidity. Whereas you know that this trend on this monthly has been bullish. So anytime you see for a valid candle range theory to be valid, the previous candle must be bearish for a bullish trend. Then for a bearish trend, the previous candle must be bullish for a bearish trend. If you see here, this is an example of a candle range theory. You see that the previous highs was swept and price closed back inside, although it's not a strong close because it's moving in an uptrend. And you see that the next candle was bearish, which now took out the previous low and closed back inside, making this one another previous CRT, candle range theory. See another one. You see how this is a bearish candle that took out this low, this previous low. You see that this place, it was taken out as the highs was taken out. That was why you saw this move down. It's just a normal previous days highs and previous days low. But when you want, if you want to use it on a lower time frame, it becomes an entry technique, and you can use it to swing. Like see the way here was taken and price closed back inside. But because this trend is a bullish trend, it closed as a bullish pin bar, which will show you that the next candle might take the low. After taking the low, just for it to show that this theory is active, making sure that, because after a sweep of a liquidity, you know that I told you that previous monthly high and lows are liquidity, where liquidities are resting. All highs and lows are where liquidities are resting. So as price have taken this particular liquidity, it needs to balance up, and that's why price closed back inside. And after closing back inside, that's why you see this push down, takes down this low and this previous low. And as it took it out, you see the way it closed back above these two candles, making this move valid. And you see that it has been working. So anytime you hear this candle range theory, is all about previous daily highs and previous daily lows, or previous monthly highs and previous monthly lows, or previous weekly highs and previous weekly lows. So there's no big deal with just name. I told you that people give different names. People give different names for them to be able to understand what they are doing. So from here now, you see that from the weekly, you see that yes, here now, price took out the previous weekly high and it did not take out the previous weekly low. You have seen that it did not take out the previous weekly low. But when price took out the previous weekly high, it closed above. It did not close inside. You see the difference? Close above, showing that the bullish trend is there. So this one now, this particular one now, is not a candle range theory. According to the person that said it's not a candle range theory from here. So this shows that price will continue this week bullish. You understand? From here, because once market open, market will close, it will close and open at the same level, making this place to move, making the price to move upward. So let me now conclude. When you go down to the daily time frame, okay, you see what happened on the daily. You will see that on the daily, price took out the previous daily high too. Price took out the previous daily high, which signals a strong bullish move towards the previous weekly high. So this is our target. This is our target. But for an entry, for you to use CRT as an entry, like from here now, you see that price have already given a fair value gap here. But let me explain this candle range theory from this point. From this point, just want to use this monthly time frame today. You see that from here, this is the last bearish candle. This is the last bearish candle before the sweep. This is the last bearish candle before the sweep. Before the sweep of the previous monthly low. This is the last bearish candle before the sweep. So since this is the last previous bearish candle before this sweep that you see here, before this candle that you are seeing at the opening of the month, you see that once price took out this low, it went back inside the range. That is the only difference between what I mean by I want to use this as an example. And as you see that as price closed back inside, price has been dancing around inside, showing that price have finished pulling back to retest the. If you go down, you see that it's just there to retest a zone, and the zone is this inside bar here, which is here, inside candle here, which is here. You see that price have already done its part, and there's another fair value gap which starts from here too, which you can even say as, okay, here has been a POI, a demand zone. You know, here is a demand zone already. So it's a POI for some, like, maybe it's, in fact it's a POI because it's a strong support zone or a strong demand zone, anyone you feel like to call it. There's no difference, just the difference is the other block around this area. Because if you go down to the lower time frame, you will see the importance why price went down, took out this previous monthly low, and because there's a narrative here on this fair value gap. That was why price ran through it and now pushed back inside. This is acting as a magnet. And all this previous monthly low is a magnet, which is a sell side liquidity. So price have taken the sell side liquidity, close back inside, showing us that this move will continue. The bullish move is about to continue. So that's number one. So the second aspect for you to get a clear entry, if you understand this higher time frame context, it will be easier for you to go down to a lower time frame, like on this 4-hour time frame. You see what price did on this 4-hour time frame. On this 4-hour time frame, see that immediately price took out the previous, hit the previous with this candle here. And you see this tiny candle here. This tiny candle here. Price ran through the previous daily high and it went back inside. And as it went back inside, you can see that we have a tiny fair value gap here. which it obeyed and pushed back up again. And as it pushed back up again, you see that price dipped inside again. And we have another, we have, let me clear all this so that it will be clear. We have another fair value gap, big fair value gap, which connive, which with this other block here. We see a breaker block here. So as you are going down, this breaker block is not signaling an inverse bullish fair value gap. It's signaling a bearish inverse fair value gap. So you will not say maybe this one and this one align with our market structure. It's not aligning with our market structure, and our market structure is bullish. So anything you are looking for is for you to get a bullish entry. That is the target, a bullish entry. So you have marked out all these places that can be a barrier. Now, the real candle range theory is on this 4 hour. For your entry, you can use it as an entry. Look at what happened on this last 4 hour candle. Look at you can use it on any time frame, even lower time frame. You can use it as an entry. So you mark the previous highs and lows, and you see the way price now close back inside. Price now close back inside. As price now went back inside, you see what happened on the 1 hour. You see on the 1 hour is a clear pin bar. It's a clear pin bar within the candle range, the candle range highs and lows. The candle range highs and lows. Price close back inside, because let me align it. Let me adjust it very well so that you understand what I mean. This is the candle range high and this is the candle range low, and price took out the high and closed back inside. So the retest we are talking about is that the previous daily high was taken. It was taken, run through, move through this fair value gap that was here, and still push up again, and now it's coming back for the final retest. So the retest might be taking out this candle range low and giving us another fair value gap for us to rise the bullish trend. So this is just it. And if you want to take this entry on 5 minutes, is the perfect time frame for you to take this entry. Once you see the sweep of this candle range low here on the 5 minutes, you just wait for something like this fair value gap, and once you see it, you spot it around this area. You can go anywhere because you know it's new week. You can join the trade, but you know that the best time to join it is New York session. And if you catch it around Asian session, maybe you closer early. And sometimes, because this Friday closes out on breakout, you might see price closing inside, giving a Tuesday the best day to trade the GBP card. So that is just the simplest way to trade this candle range high and candle range low. And if you see on this 5 minutes, you see an engulfing candle too. You see an engulfing candle that gave the scenario towards this downside, and this downside is just a short time retest, and it has already given us a a a bearish fair value gap, which price can tap into. You know that this one is dragon fruit. Is although it's on a smaller time frame, it's called dragon fruit. Once you tap it, there's another block here. After this other block, you now get this one, and that's how it is. So candle range theory is just the same thing like previous highs and lows. And once price sweep the highs, sometimes there's a reversal, and they only trade that reversal. And if the reversal is at a peak zone, that's why they take the reversal, and the vice versa, both the bullish and the bearish. And why my own break and retest is different is that once price breaks the high, I'll wait for the retest and continue. I can continue, I can trade the continuation, and we can trade the reversal. In that break and retest, you can trade the continuation and you can trade the reversal the way I show you on this 1 hour candle. So the only thing for you to do is always wait for either of the highs or the lows to be swept. And once it's swept, so you see the CRT model is not a bad one. It's a very good entry technique that you can use to enter your trade, and the trade will go perfect if you actually understand, because once you use it on 5 minutes, once you spot any fair value gap that is created new on this 5 minutes, if you take your bullish entry, your stop loss is going to be very, very small. I'll keep updating the this GBP card. I'll keep updating it till up until Tuesday for you to understand, and keep back testing too.